If you are 65 or older and on Medicare, Social Security gave you a $56 raise in January. Medicare took $17.90 of it before you ever saw it. And if your income was over a specific number in 2024, Medicare may have taken far more than that. We are talking about monthly charges of $284 or higher, pulled silently from your check, based on a tax return that is now 2 years old. By the end of this video, you will know exactly what to check, how much you may be losing, and the one form that can get it back. This channel covers Medicare, Social Security, and senior financial rules, because CMS and the SSA do not send you a personal letter explaining every way your check gets reduced. They change the rules. They send a determination notice. And if you don't know what you're looking at, the money is gone. The people who are subscribed to this channel find out what changed and why. The people who aren't tend to find out after the deduction has already been running for 6 months. Hit subscribe, turn on the bell, and let's get into it. Here is what is happening right now in 2026 and exactly how it affects your monthly income. Number 1. The COLA was real. So was the Medicare increase that canceled part of it. Social Security confirmed a 2.8% cost of living adjustment for 2026. For the average retiree, that translated to roughly $56 more per month. That sounds like a win, but here is what Medicare did at the same time. The standard Part B premium, that is the monthly charge for doctor visits and outpatient care, jumped from $185 in 2025 to $202.90 in 2026. That is a $17.90 increase per person per month, pulled automatically from your Social Security deposit before it ever reaches your bank account. So the math for a typical retired couple looks like this. They got $56 more from the COLA. Medicare took $35.80, $17.90 each, off the top. Their actual take-home increase was about $20. That is not $56. That is not even close to $56. What most people don't know is that this is not accidental. Medicare premiums are deducted before you receive anything. The SSA does not send you a separate bill. There is no envelope, no warning. You just notice your deposit is smaller than you expected. And if you are not checking your benefit statement every January, you may not notice at all. The action step here is simple. Go to ssa.gov and log into your My Social Security account. Pull up your current benefit verification letter. Confirm the exact Part B premium being deducted. If you are seeing $202.90 per person, that is the standard rate. If the number is higher, especially if it's $284.10 or above, stay with me because that brings us to number 2. Number 2. There is a hidden surcharge that millions of seniors are paying right now and do not fully understand. It is called IRMAA. That stands for Income-Related Monthly Adjustment Amount. Almost nobody in the general public knows this name. But if it applies to you, it is costing you real money every single month. Here is how it works. Medicare does not use your current income to set your premium. It goes back 2 years. For 2026, Medicare is looking at your 2024 tax return, specifically a number called your Modified Adjusted Gross Income, your MAGI. If that 2024 income was above $109,000 for a single filer, or above $218,000 for a married couple filing jointly, Medicare charges you a surcharge on top of your standard Part B premium. At the first income tier, $109,000 to $137,000 for a single filer, your Part B premium jumps from $202.90 to $284.10 per month. That is $81.20 extra every single month per person. Over a year, that is $974 per person. For a couple where both are on Medicare, that is $1,948 per year that never hits your bank account. Picture this. You retired in late 2024. Your income that year included several months of your salary, maybe some retirement account distributions, maybe you sold some property. The total was over $109,000. You have now been retired for over a year. Your income is much lower. But Medicare is charging you the high premium based on that busy final working year, not your current reality. The SSA does not automatically know your income changed. It does not check in. It just keeps running the higher deduction month after month until you do something about it. IRMAA also applies to Part D, your prescription drug coverage. At that same first tier, you pay an additional $14.50 per month on top of your drug plan premium. At higher income brackets, IRMAA on Part B alone can push your total monthly premium to $689.90 per person. The action step. Call Social Security at 1-800-772-1213 and ask what IRMAA tier you are currently in. You can also find this on your IRMAA Initial Determination Notice, which SSA mails before the start of each coverage year. If you received that notice and did not respond to it, do not assume the charge was fixed. Keep reading. Number 3. The 2-year look-back rule is trapping retired seniors who no longer earn that income. This is the core of what makes IRMAA so frustrating. Medicare uses a 2-year look-back. That means if you retired in 2025, you may still be paying high premiums in 2026 based on your full 2024 working income, even if you now earn a fraction of that amount. Here is a specific example. A retired teacher left her job in March of 2025. Her 2024 income, her last full year of work, was $128,000. That number pushed her into the first IRMAA tier. So right now, in 2026, she is paying $284.10 a month for Part B instead of $202.90. She is losing an extra $81.20 every month, based on income she no longer makes. The SSA is not going to correct this on its own. It has no automatic mechanism to detect that she retired. It is looking at a tax return, and that return says $128,000. This same trap catches people who had a one-time income event in 2024, a large IRA distribution, a home sale, a lump sum pension payment, that pushed their income above a bracket threshold. That single event, even if it never repeats, can trigger a higher IRMAA for an entire calendar year. The SSA does not send a reminder when this happens. The determination notice comes, but most people do not know what it means or that they can fight it. Stay for number 4, because it covers the exact form and the exact phone call that can stop this overpayment, sometimes within weeks. Number 4. There is a formal appeals process almost nobody uses. It is called Form SA-44, and it can eliminate your IRMAA surcharge based on current income. This is the step that changes the outcome. The Social Security Administration has a formal appeals process specifically for situations where your income has dropped due to what they call a qualifying life-changing event. The form is SSA-44. The full official name is Medicare Income-Related Monthly Adjustment Amount, Life-Changing Event. The qualifying events that allow you to file include retirement or stopping work, a significant reduction in work hours, the death of a spouse, a divorce or annulment, a loss of pension income, and a loss of income-producing property. If any of these apply to you, you are eligible to ask Social Security to use your more recent, lower income instead of the 2-year-old return they are currently using. Here is what filing looks like in real life. You download Form SSA-44 from ssa.gov. On the form, you check the box for your qualifying event, write in the date it happened, and provide your actual or estimated current income. You attach documentation, a final pay stub, a retirement letter, a pension termination notice, whatever matches your situation. Then you submit the form to Social Security, either at your local SSA office, by mail, or by calling 1-800-772-1213 and initiating it over the phone. When Social Security approves your request, they recalculate your IRMAA using your current lower income. If the recalculation drops you below the $109,000 threshold, your surcharge is eliminated entirely. If it drops you to a lower tier, your surcharge decreases. Either way, the savings are immediate going forward. Some people also receive a credit for the months they were already overcharged. What most people don't know is that approximately half of all SSA-44 appeals fail, not because the person did not qualify, but because of documentation errors, a missing pay stub, an event box left unchecked, an estimate that was not supported by paperwork. The fix is straightforward. Attach everything. Final pay stub, retirement letter, statement from your former employer, a copy of the relevant page of your most recent tax return. Make copies of everything before you submit. If Social Security denies your SSA 44 and you still believe you qualify, the next step is Form SSA 561, a formal reconsideration request. The phone number remains the same, 1-800-772-1213. Number 5. The cliff effect, and why $1 of extra income can cost you over $1,000 per year. This is the detail almost nobody warns you about, and it is the one that quietly traps seniors who are trying to manage their own finances. IRMAA works as a cliff, not a gradual scale. If your 2024 income was $108,999, you pay the standard Part B premium of $202.90 per month. If your 2024 income was $109,001, $2 more, you pay $284.10 per month. That single dollar threshold triggers $974 in additional annual charges per person. For a married couple where both are on Medicare, it triggers $1,948 in added costs. This matters right now because 2026 premiums are locked to your 2024 income. You cannot change 2024, but 2027 premiums will be set based on your 2025 income, and that year is not closed yet. If you took a large IRA distribution in 2025, made a Roth conversion, received a lump sum payment, or had any one-time income event, you may be heading into a higher IRMAA bracket for 2027 without knowing it. The action step here is to look at your 2025 income now. Calculate your modified adjusted gross income. That includes wages, self-employment income, interest, dividends, capital gains, IRA distributions, rental income, and the taxable portion of your Social Security benefits. If that number is near $109,000 for a single filer or near $218,000 for a married couple, you are near a cliff edge. One unplanned distribution in the second half of the year could push you over. If you have flexibility in how much you take from a retirement account between now and December 31st, 2025, consider managing that withdrawal carefully. If your income is already over the line and a qualifying life event occurred, remember Form SSA 44 is available to you. Here is your summary. Social Security's 2026 COLA added $56 per month to the average benefit. Medicare's Part B premium increase immediately claims $17.90 of it per person. If your 2024 income was above $109,000 as a single filer or $218,000 as a married couple filing jointly, you are currently paying IRMAA, a surcharge that starts at $81.20 extra per month and can go far higher. The 2-year lookback rule means your 2026 premium is based on your 2024 tax return, not your current income. If your income has dropped since then due to retirement, spouse loss, divorce, or reduced work, you are likely overpaying right now. Form SSA 44 is the official appeal form. Call 1-800-772-1213 or go to ssa.gov to download it. Include all supporting documentation or your appeal will likely be denied. The IRMAA cliff means $1 of income above a threshold can trigger over $1,000 in annual surcharges per person. Know where you stand before the year ends. Subscribe. Share this specifically with any retired friend or family member who went from a working income to a fixed income within the last 2 years. They may be paying a Medicare surcharge they no longer owe and have no idea. I'll see you in the next one.